How are you doing? How's everyone doing today? So the topic, like we've seen, is types of life insurance. If you're joining me on YouTube, I'm going live on YouTube as well. Same for I'm sorry about that. It's on YouTube. So yep, we're gonna begin in a second. Types of life insurance, that's what we're talking about. How many people are informed about the different types of life insurance that we have? I know a lot of people are not informed, but we're trying to see how we can educate more people out here on the different types of life insurance that we have. Okay, so let's begin. If you're joining me on YouTube, I am sharing my screen on YouTube. You can Google Helen or Red Job B, and let's begin. So we have different types of life insurance. By the way, my name is Helen Orejobi. If you're joining me newly, if you're new to my channel, welcome, welcome, welcome. I'm super excited to have you up here. I don't have to move my screen, bear with me a little bit. Okay. So it's just going to be a brief education, financial literacy education. But today, the main topic of today is going to be on, the types of life insurance. Now, what are the various types of life insurance that we have, right? If you're new to my channel, like I'm saying, we're going to be exploring all the different types of life insurance from term to whole life to universal, variable. We're going to talk about the index, just a little bit of, housekeeping here and there. And then consequently, we're going to do more, dive into the various options that are available to you and your loved ones financially. So stay tuned to discover which type of life insurance best suits your needs and your family goals. So I recommend you grab a pen and paper for this one. It's going to be quite interesting and educative. Also, if you know anyone that this information might be beneficial to, kindly share this video. If you're on YouTube, it's going to be posted on Facebook. I'm live on YouTube and Instagram right now. Kindly share this video and, let them know that they can actually start today. Yesterday was the best time. Today is another great time for them to get started. My team and I were here to help you set up a formidable plan. So quickly, let's get into this. So the types of life insurance that we have available, right? We have the term and we have the permanent life insurance. Now with the term insurance, what do we have? What is term life insurance? Term life insurance is something temporary, right? Like the word says, term. So it's usually ranges from 5 to 30 years, right? So if the insured individual dies during this term period or the time of the period, the term means the contract term, it could be 5 years, it could be 10 years, 15, 20, 30, years that you're going to sign with this company or the carriers that, hey, for this period of time, give me coverage for X and Y period of time. Now, within that contract term, if that person dies during that time, the death benefits gets paid out to the designated beneficiaries. However, the insured individual outlives the term, of the policy, therefore, there's no payout. If the person goes beyond that 30 years, it could be 5 years, you're signing a 5-year. If anything happens after 5 years, the contract, remember, is a contract, the binding contract between you and the carrier, the IMO, whoever the insurance company is. If you were to die after the term period, which is a temporary fix, right, you don't get a payout. But if anything happens within that term period, you get a payout to your beneficiaries. Now, the coverage expires, unless if it's renewed or converted to a permanent life insurance policy. Now, what are the features of a term life insurance policy? Remember, like the word says, it's term, is temporary, right? Now, the features are, number one, it's affordable, right? Term life insurance tends to be more affordable than the permanent life insurance options, making it the most popular choice for individuals looking for, basic life insurance coverage without cash value accumulation. So if you're looking for something very, very much affordable, it can range from $10 to 30, depending on the amount you're trying to buy. I see people buy $1 million, slightly under $50, right? So, but you have to remember at the back of your mind that this thing is termed. So now, number 2 features of the term life insurance is that the premiums are fixed. Premiums for term life insurance policies are typically fixed for the duration of a term, providing predictability and ease of budgeting. So if you want to stay on a fixed premium, say you're 30-year-old, you want to get a policy, I see you saving around maybe like $20 a month. It's going to stay fixed for that duration that you try to lock it in. Some people lock it in for 20 years. Thank you, sis. Some people lock it in for 30 years. So that period of time, you're going to lock that rates for that time. But if after that period you die or something happens, trust me, your premium is going to go high. So remember, it's a term, it's for short time, temporary fix, right? So if you're going to do that, make sure that you have this at the back of your mind. So if your insurance agent is trying to sell you a term policy, always know that, right, it's temporary. And if anything happens, if you don't die within that specific time, you will have to repurchase another one, right? And it's going to be likely more expensive. Now, number 3 feature is it's flexible. Many term life insurance policy offer flexibility in terms of coverage, duration, and the benefit amount, allowing policyholders to tailor their coverage to their specific needs. Number 4, guess what? Death benefits. The death benefit gets paid out to the beneficiaries in the event of the insured individual's, deaths. It's typically tax-free, can be used to cover various expenses. I see people use that to cover mortgages, payments, living expenses, educational costs, and what have you. So usually most people that have the term policy, if you are a co-signer on anybody's mortgage, if you are a spouse to your loved one, you both, I recommend you have a term if you don't have anything right now. If you have same debt, if you have shared debt, you want to make sure that if that person, one person passes on, if you don't have a way to keep paying that other person's, part of the money, getting them a term policy is the best way to go. Why? Because if that policy pays out upon their debt, you can use that payouts to offset the mortgage or whatever it is that you co-sign with that person, right? And then guess what? Number 5 feature of the term insurance policy is that it has convertible options. So it doesn't matter you start right now, you tell me, hey, Helen, I don't really have so much money, but I just want to have coverage. Yes, is an option. You can go ahead and get the term. And over time, you can convert that into something much more permanent, right? Without undergoing medical exam. That is a great option if that's your goal. There's no need for you to wait until you have money. I hear people say, oh, Helen, this is not the best time. Let me just get another job. Let me get more income. Maybe next year, see me 6 months from now. Trust me, 6 months from now, you can't predict what your health situation will be like. So your best bet is to jump on one now, get you a term policy, right? And then have the option, that when things changes, if your finances changes, you can actually convert that term policy to something much more permanent. And this can be beneficial for your, insurance needs, change over time if you want to maintain coverage beyond the initial term time. Now, number 6, which is the last feature of the term policy, is that it doesn't have no cash value, unlike the permanent life insurance, right? Such as whole life, universal life, right? Or the index universal life. Trust me, term does not accumulate cash value over time. As a result, it generally offers lower premiums to you, but does not provide investment or savings components. So term life insurance is basically recommended for, like I said, for people with financial obligations, or if you have dependents. Your dependents could be your kids, young children. It could be your aged parents. If you have relations that depend on you financially, you want to get a term life insurance for yourself. Guess what? It automatically kicks it as an income. I always say something, income replacement. If something were to happen to you today, right? right? You want to make sure that the lifestyle you have created for your loved ones transcends after you are gone, right? So you want to have the right protection for yourself. Now, talking about the permanent life insurance, right? The permanent life insurance has a lot of features that I can, categorically, say here. One of those features that they have is the fact that it gives you lifetime coverage, unlike the term, it gives you lifetime coverage. Then there's cash value accumulation. Your premiums are fixed. In some cases, it could be flexible. Yes, it gives you death benefit as well. But guess what? With the permanent life insurance, some permanent life insurance, the focus is not really on the death benefit. The focus is on the fact that you could use that as a cash accumulation account, right? Your premiums are flexible in some cases. Your policy options are flexible. You could use it as an estate planning benefits for, to make sure that you pass on generational wealth, which is what we always advocate for. And then some of them have access to policy loans and withdrawal, whereby you get to use it as an infinite banking where you can, use it as a bank, basically what your bank typically does right now. You could use that for that. Now, there are 5 types of term life insurance before I move on to the term. There's level term insurance. What that means is your premium remains the same throughout the duration of the policy. There's decreasing, term insurance. The decreasing is a situation whereby, if it's designed in a way that you can decrease, the payment term over time, right? Now, decreasing term insurance is designated to match the declining balance of a specific debt, such as maybe mortgage or loan, right? That's where that comes into play. And then another thing that you always have to know about the decreasing term is that the debt benefit decreases over the policy term, typically in line with the outstanding balance of the debt that you are using it to cover. And then lastly, for the decreasing term, which is also the type of term policy, is that premiums for decreasing terms are often lower than those of a level term, right? The premiums are lower. Another type of term life insurance could be the renewable one. I already said this. You can actually renew. You could choose maybe at the end of the policy term that, hey, I want to renew my term at the end of the initial term that you had, signed under. And then most carriers will let you do this without undergoing medical exams. And then another feature to that is that the policy owner, which is yourself, if you have one of those type of term life insurance, have the option to renew this term with a higher premium reflecting their age. So this is one thing that you always have to consider. If say you got it today at 18, because from 18 years, you could typically have a term life insurance, and then it covers you for a period of maybe 30 years. So by the time you add 18 to 30, you're going to be 48. So at 49, if you're trying to renew this term policy, you're going to have to pay it at age 49. That's a disadvantage right there, right? But that's what it offers you. You're going to renew at that time. Now, convertible, like I said, you can convert it. Some policies allow you to conversion period 2 to 5 years. Some people give you a longer time to convert it to a permanent one. And then there's annual renewable term life insurance as well. And next on this is who should get the term life insurance, right? Who are the people liable to get the term life insurance, right? So the people that should get term life insurance are adults. If you're 18 and above, you want to make sure that you have something, right? Most of us, that are going to watch this video on a later date, if you're watching right now, if you're 18 and above, you have a phone, you have gadgets that you pay insurance on, you have your car, you pay auto insurance on your car, you even pay rental insurance on your apartments or your home, whatever you're doing. If you have a business, you have business insurance. So if you're 18 and above, you always know that you must have insurance. And then number 2, people with good health should have insurance. Some companies might not give it to you if you have serious underlying health issues. You might not be a candidate for life insurance, right? So the best time to get life insurance is when you are still young and you have good health. You should jump on one right away. Not to say for people that have health challenges cannot get it, but it might be expensive because of your rates class, right? And then non-smokers or non-tobacco users should, get life insurance. And then number 4, individuals with dependents. I said this, if you have children, if you have a spouse, if you have aging parents, you should get term life insurance. it's a protection for them, just in case you are not here anymore. You want to make sure that you plan for your kids to go to college, or you plan for your family to live at that zip code that you have created, the lifestyle you have given to them. You want that lifestyle to keep going even after you're gone. Your term life insurance can be designed in a way that even after you go, the money pays out as your income, especially if you're the breadwinner of the family. You want that income to keep going, right? So say you have, maybe you get 3,000 bi-weekly. You want to make sure that upon you passing on, that money gets paid every 2 weeks to your family for a period of up to 25 years. Yes, you don't have to say, okay, once anything happens to me, the 100,000, $1 million get paid out in one go. No, you can sit down with a financial professional that knows what they're doing to design something very good for you that can replace your income, so your family don't get to miss that income. When they think of you, they're like, oh, daddy, oh, mommy, oh, grandpa, yes, we miss the physical impact, but we still feel your contribution and we still feel the love, right? You don't have to earn everything if people pass on, right? So that's the goal. Now, if you're income earner, like I said, you need to have life insurance, right? And then one thing that I know is some life insurance has living benefit while others don't, right? The old traditional life insurance do not have living benefits. It only pays out to your beneficiary. But the new life insurance that some carriers offer, once anything happens to you that is like an underlying health issue, critical, chronic, and terminal, right? They pay out to you while you're alive. So this can still act as income replacements for you as well. If you're a business owner, you want to jump on one, get you a life insurance plan to make sure that your business, doesn't die after you're gone, right? It provides funds to buy out, your disease, maybe your partners, so your family can actually continue keeping, if you have partners, or if you don't have partners, you're the only one on the business, you want to make sure that your brand name outlives you. That's why you see big brands like McDonald's and Walmart and Co, JC Penney, they're still a strong brand even after the owners have long gone, right? Nobody wants to just go and then everything you built goes down the drain, right? That's the generational wealth we're talking about. And then lastly, if you have a mortgage, trust me, you want to jump on one, right? So the permanent life insurance, right? Who are the people that should get it? Same thing, right? Adults, people with good health, non-smokers, individuals who have long financial goal. What does that mean? If you have financial goal, if you want to go into a business, if you want to accumulate wealth, if you want to, focus on estate planning, options, if you want to transfer wealth from your, legacy to your kids, you want to transfer wealth to your heirs, right? You want to make sure that you have what is called a permanent life insurance, right? And then individuals seeking lifetime coverage. If you're not bothered about the temporary fix, the 5-year, 20, 30 max, you want something that won't outlive you. You want something that even after you're gone, right? Like can take you all through. I don't know anybody that's that doesn't want to outlive, whatever they have. You want to actually, make sure that even after you retire, when you're gray, you want to make sure that you still have coverage that can, transfer into the millions, right? So for people that want to outlive, what they have, you want to make sure that that don't want to outlive what they have. You want to make sure that you are still, in good health. Even if you're sick, you want to make sure that your money is still there that can transfer to your generation. From generation to generation, you want to kick into the permanent one. Now, lastly, for those people that are interested in cash accumulation, because most of these plans, the permanent life insurance, some of them are invested in the indexes, some of them give you cash value. It's like you participating in the gains or the bonuses of the insurance company. So if you want to make sure that you're not just wasting your money, like you're renting a house, when you're paying your rent, you don't get any equity contribution, right? No. But if you own a house, if you own a mortgage, if you own a house, as you're paying your mortgage, you're building equity. So that's what the cash accumulation offers you, right? You're not just putting money in a basket that drains out. You're storing money in financial buckets that is playing against indexes, compound interest. Over time, you get to see the dividends of what you're doing, right? And for business owners, and if you want to plan your estate as well, right? Those are the ones you do. Now, we have 4 main permanent life insurance that's I want us to focus on, right? Number 1 is the whole life insurance. There's a lot of rave about the whole life insurance, right? Whole life insurance provides coverage for the insured's entire life. right? The premiums are typically flexible or fixed for life, and it can take you up to age 120, right? We have different types of, payouts. You could do the 20 pay, the 30 pay, depends on what you want to do, or you pay up till the end of your life, right? The portion of the premium payment goes towards building cash value, which grows at a guaranteed rate, right? Policy owners can access the cash value through withdrawals or policy loans, right? So just like your bank, you can actually, access those funds from withdrawals or policy loans. Those are, strategies in which you can take out money from your plan, right? That we can talk about if you go ahead and schedule a free 30 minutes discovery call to look at your options, right? Remember, I said get a pen and a paper, jot down. If you are just joining me, you're welcome. My name is Helen Orejobi. I am streaming live on YouTube and Instagram. You could take notes, and then when you come on a call with me, we get to talk about what you really want to focus on, right? And then guess what? For the whole life, it's guaranteed death benefit and cash value, providing you with stability and predictability, right? Number two type of permanent life insurance is the universal life insurance. Now, universal life insurance covers, offers you flexibility in premiums, payments, and death benefits, right? The policies can adjust the premium, the policy owner, right? You can actually say, hey, I want to adjust the premium payments and death benefit over time within certain limits according to what the carrier can, offer. Now, number three is, guess what? Cash value accumulation based on minimum guaranteed interest rates, right? But it may also be based on the market performance if the policy offers indexes or variable option. So if you're going for one that is, invested in the index, you have to, go by the interest rates and also by what that carrier or the insurance company is offering you. We have a lot of insurance companies that we use, right? We have a lot of insurance companies that we use over time. I work with over 100 insurance company. I am not a captive agent. I'm a non-captive agent, also a broker. So I have right to tell you what I have to do. Sorry about that. I think I get a call, somebody that really wants to talk to me. Okay, so number three, right? Number three is the variable life insurance. Now, variable life insurance allows policyholders to afford or to allocate cash value portions of their premiums into various investment options, such as mutual funds. But I'm not going to dwell on that right now, right? So I'm probably going to skip that to the fourth one, which is the index universal life, which I can guarantee I can conveniently talk about, right? Because of my license to do this. Now, guess what? Index universal life insurance offers the flexibility of the universal life, insurance, like I mentioned earlier, right? Combined with potential for cash value growth. It's linked to the performance of a stock market index, such as S&P 500 and the likes, like global and the likes, right? Now, number two feature of the index life cash value account is that it gives you cash accumulation, which is tied to the performance of selected indexes with a minimum guaranteed interest rate to protect against market downturns, right? So with this one, there's protection, right? You don't lose your money over time, right? You don't lose your money in this account because it's an index account. Your gains are locked in, and your principal is protected. Like I said, number three is policy owners can benefit from market gains while also having downside protection, right? So those are very, very key points you want to note. And then number four, index universal life, policies, typically comes with a cap or participation rate that limits the maximum return on cash value. That I would take the cap and the participation rate in another video. So if you want to learn more, you could have a series of videos about this. You could go to my YouTube page and watch more, to get more, points on that. Now, so each type of permanent life insurance has its own advantage and considerations, and most suitable options depend on individual financial goals. So what are your goals? What are your risk tolerance? What are your preferences? Once you look at those, you can now sit down and say, okay, this is the right plan for me, right? It's not a one fit all like plan. No, you have to sit down, look at your situation, look at your financial your situation, look at your risk tolerance, look at what you're able to do before you jump on the plan, right? And a financial professional like myself or anybody on my team can help you do this, right? It's essential to carefully evaluate the features, the cost of each type of policy and consult with us so that we can help you. The goal is to help you save money and not to take money out of your hands, right? So now, like I said, so the whole life, right? Most people talk about the whole life. The whole life is also a permanent life insurance, like I said. Now, it gives you lifetime coverage, meaning your policy remains in force for the insured individual's entire lifetime, right? Providing guaranteed death benefit to beneficiaries upon the deaths, of the insured, regardless of the age. Number two, your premiums are fixed. Premium payment over the term of the policy, which is whole life, right, are typically fixed for that period, providing predictability and stability in budgeting for insurance costs. Number three, cash value accumulation, right? A portion of this premium payment is allocated to cash value accounts, which accumulates tax deferred, over time. Policyholders can access this cash through withdrawals or policy loans, providing a secure source of fund for various financial needs. I see a lot of people using the money once they withdraw those money to reinvest in real estate. I used to be a realtor in Africa, so I'm a big fan of investing in real estate. So if you want to make money and grow money and become rich like the 1%ers, what I'll tell you first is get a permanent life insurance. It doesn't matter if it's whole life, if it's universal life, get you one. And then once you make profit off it, you're going to use it as a bank account. You take the profit, right, as in form of a loan and go invest in those investments that you want to do, right? If you want to buy a car, do the same. Take the money from your policy and go buy you a car. And then guess what? You can now be paying back to your policy instead of paying to the bank. Like, you know what I mean? But those are strategies that we teach, which is called infinite banking, for you to become your own bank, right? And cut out the middleman and get your life in order, right? You want to have control over your life and own nothing. That's another level to this thing. And then number four, it gives you guaranteed cash value growth. Whole life insurance offered guaranteed cash value growth, meaning the cash value accumulation at a guaranteed rate of return in your policy. Dividends payments. Some whole life insurance policy participates in the insured surplus earnings and may pay dividends to policy owners. Now, these dividends can be used to increase the cash value. It can also reduce premium, purchase additional coverage, or it can be taken as cash. Number six feature of the whole life is that it gives you loan, provision. Like I said, you can borrow against the cash value of the whole life policy through policy loans. This policy loan typically has low interest rates and do not require a credit check because you own this policy, right? The fact that you're still alive, that's a collateral right there. That's a guarantee that you're going to get a loan from your own life insurance accounts, right? Now, number seven is non-forfeiture option. Whole life insurance policy often include non-forfeiture options such as reduced paid up insurance or extended term insurance, which allows you as a policy owner to maintain coverage or access some benefits even if they stop paying premium, right? So these are very, very good features if you own a whole life insurance account. Number six, which is the last one of the feature of the whole life, is that if you want to plan like your estate planning benefits, whole life insurance can play a vital role in estate planning by providing liquidity to cover estate taxes, equalize inheritance among heirs, right? And transfer wealth to future generation. This is what the Rockefellers are using. This is what the wealthy people are using to transfer generational wealth from one generation to the other. Now, whole life insurance is suitable for individuals who seek long life or lifelong coverage, by the way. Sorry for that. Lifelong coverage, right? It's suitable for them. And then also guaranteed death benefits and cash value accumulation. It is often recommended for individuals with long-term financial goals. What are those financial goals looking like for you? Such as retirement planning, estate planning, or providing financial security for loved ones. However, whole life insurance typically comes with higher premiums compared to term life insurance. So it's essential to carefully consider your financial situation and insurance needs before purchasing a policy. So consulting a licensed financial professional like myself or anybody on my team can help you determine if whole life insurance is the right choice for you, right? Now, next one on my list is the variable life insurance, right? So the variable life insurance, the feature that you see here is also a permanent life insurance, like I said, that offers flexibility in premium payments, death benefits, and cash value accumulation. Here are some key features of the universal life, of this universal life, right? Number one, excuse me for that. They give you lifetime coverage like other type of permanent life insurance. Universal life insurance provides coverage for the insured's entire lifetime as long as the premiums are paid, right? As long as your premiums keep coming in, it provides you coverage. Two, it's flexible premium payments, unlike whole life insurance. Universal life insurance allows policy holders to adjust the timing and amount of the premium payment within certain limits. Policyholders can choose to pay premiums in excess of the cost of insurance, building up the policy cash value, or they can pay the minimum, premium required to keep the policy in force, right? Number three, adjustable death benefits. Universal life insurance policy typically offers the flexibility to adjust the death benefits among, amounts, to adjust that death benefits, over time, adjust the amount over time for you, to make sure that you have that flexibility that you want. So policyholders can increase or decrease the death benefits to accommodate the changes in financial needs, such as marriage, childbirth, or any changes in your income, right? That's the adjustment that we're talking about. Number four, cash value accumulation, similar to whole life insurance. Guess what? The universal life insurance include a cash value component that accumulates over time on a tax deferred basis. The cash value grows based on the interested, the credits on the interest that you've been given to the policy by the insurance company, which is typically tied to the prevailing market interest rate, right? So that cash value is based on the interest that's been credited to the policy by the insurance company, right? And then number five, interest rate options, right? Interest rate options is number five. What that means is universal life insurance policy often offers different interest rate options for the cash value accumulation components, right? Such as fixed interest, such as index interest rates linked to the market indexes, or variable interest rates tied to investment performance. Now, number six, policy loans and withdrawals. Policy holders can access the cash value of their universal life insurance policy through loans or withdrawals. These options allow flexibility in managing financial needs while maintaining the policy's death benefit. Number seven, cost of insurance charges, right? Universal life insurance policy typically have cost of insurance charges deducted from the cash value to cover the mortality risk of the insured. These charges can vary based on factors such as age, health, and the chosen death benefits, amounts. Now, number eight, no lapse guarantee. Now, a universal life insurance account or policy, offers a no lapse guaranteed option, ensuring that the policy remains in force as long as the required premiums are paid, regardless of changes in interest rate or cash value performance. Universal life insurance is suitable for individuals who seek lifetime coverage with flexibility in premiums, payments, and death benefits, right? So if you're looking for that flexibility, this is it. It can be particularly appealing to individuals with fluctuating financial needs, or those who want the potential, for cash value accumulation alongside their life insurance coverage. However, it's essential to carefully review the policy's term and features, as well as consult with a licensed insurance agent like myself or my team, right? You can meet us for 30 minutes free consultation with all the information that you have. The link is in the description. Book a free 30 minutes consultation. And then we'll sit with you and we'll design something that is suitable for you to make sure that we're meeting your specific financial needs and circumstance. Now, the variable life insurance, right, is a typical permanent life insurance that offers both the death benefit and cash value component, with cash value invested in selections of sub-accounts such as mutual funds, right? So with this type of life insurance account, right, is something you want to meet with your financial, professional, like I said, to sit and look at it. Same thing like the others, it gives you lifelong coverage, death benefit, cash value components, investment flexibility. Like I said, you can invest in other markets. Now they can adjust the allocation based on your risk tolerance, right? Right. So that's what it is, right? What it means is, with this type of one, I see people investing, the cash components, right? You over time, based on the performance of the investment sub account, like I said, chosen by the policy owner, you are going to be the one to choose where you want your cash to go, right? Now, this sub account functions similarly to the mutual funds and may invest in stocks, bonds, or other investment vehicles. Now, investment flexibility. Policyholders may have flexibility to allocate their cash value among different investment options, right, offered by the insurance company. They can adjust the allocation based on their risk tolerance, investment objectives, and market conditions. Now, number 5, market risk. Unlike traditional whole life or universal life, the cash value of a variable life insurance is subject to investment risk. The value of the investment sub-account can fluctuate based on market performance, and policyholders may experience gains or loss. Now, number 6, premium payments, right? Policies, holders can choose between fixed or variable premium or flexible premium payment options. Fixed premium may remain constant throughout the life of the policy, while variable premiums, payments allows policyholders to adjust the amounts and the frequency of the premium payment within certain limit. Now, tax deferred growth, right? Number 7, right? Similar to other types of permanent life insurance, the cash value accumulation in variable life insurance grows tax deferred. Policyholders can access the cash value through withdrawals or policy loans and may have tax implications. With this one, there's liability for tax implication. And number 8, policy loans and withdrawals, in the sense that the policy owner can borrow against the cash value of their variable life insurance policy through a policy loan. They can also make withdrawals from the cash value to supplement income or cover expenses. However, policy loans and withdrawals may reduce the death benefit and cash value of the policy. Variable life insurance is suitable for individuals who are comfortable with investment risk and seek both the insurance protection and potential for cash value, right? If you have potential for cash value growth through investment in the financial market, it is important to carefully consider these investment options, the fees, and the risk associated with this variable life insurance. And trust me, you want to consult any financial professional like myself or my team to help you sit down and look at these options so you're making the right decision. Now, last but not the least, the Index Universal Life Insurance is a type of permanent life insurance that combines the features of traditional universal life insurance with the potential for cash value growth linked to the performance of a stock market index such as S&P 500, Global Index, and the likes, right? Here are some key features of the universal life insurance, like the lifetime coverage, right? Like we said, it gives you protection for, the entire, lifetime of the insured, right? As long as premiums are paid, right? Flexibility premium payments. Policy owners can, have flexibility in premium payments, allowing to adjust the timing and amount of the premium payment within certain limits. they can pay premium in excess of the cost of insurance, accumulation, cash value, or pay the minimum premium required to keep the policy in force, right? So what that means is you can pay the premium in excess, you can max spawn, you can pay, below, or you can pay below the target. Say maybe you're 30-year-old and your monthly premium, which is a target, is probably like 160 monthly. So if you do that annually, it's going to take you about maybe close to almost $2,000, somewhere around that bracket. Now, what that means is you can pay below your target. So instead of you paying 160 monthly, you can choose to do 150. You can choose to do 140. You can make it flexible, right? Depending on the structure or what is given to you, but you cannot pay below the minimum no lapse, the minimum no lapse that is guaranteed to keep that policy going, right? Now, cash value accumulation, right, which is the number 3 on here, right? It says here that index universal life insurance includes cash value component that accumulates over time on tax deferred basis, right? Unlike traditional universal life insurance, the cash value growth is linked to the performance of the stock market index. And then, like I said, such as S&P 500, policy owners can benefit from potential market gains, right? While having downside protection against market downturns. So you're protected, you're not going to participate in those downturns, but once the gains, are gains in the market, you're going to participate in those gains, right? Now, guess what? Indexing strategies. Index universal life insurance policy offers different indexing strategies such as annual point-to-point, monthly averaging, or fixed interest rate options. These strategies determine how the cash value is credited based on the performance of the chosen index. Number 5, cap and floor rates, right? Index universal life policies typically have, come with caps and the floor rates that limits the maximum return on the cash value and provide downside protection, right? Some companies, the cap on it could be 13. Some people go up as far as 15, right? Then the floor, most people do 0.75. Some companies do 0.25. Some people even do 0 floor, but it depends on the carrier that you're using, right? So you want to know all these components, all these features to what you're trying to get. Now, the cap set the maximum percentage of the index gain that will be credited to the cash value, while the floor rate ensures a minimum guaranteed interest rate, protecting against negative index performance. Whatever the case, you're never going to see a minus, right? You're never going to go in a negative. It's always going to be, right, on the positive side, and there's a guaranteed rate which is the floor that they give you, right? Now, guess what? Number 6, policy loan and withdrawals. Policyholders can access the cash value of their index universal life insurance policy through loans or withdrawals. They can also do this through different options, providing flexibility in managing their financial needs while maintaining the policy's debt benefits, right? So while you're trying to take money, you're making sure that you're not going to deplete your account in a way that your policy is going to lapse and then your debt benefits is gone, right? So there are rules to it, there are restrictions to it, right? For you to go ahead and do that. And then number 7, which is the last, like I said, no lapse guarantee. Some index universal life insurance policy offer a no lapse guaranteed options, ensuring that the policy remains in force as long as the required premiums are paid, regardless of changes in interest rates or value, the cash value performance. Index universal life insurance is suitable for individuals who seek lifetime coverage with potential for cash value growth linked to the performance of the stock market index. It can be particularly appealing to individuals who want the opportunity for market-linked returns while, having downside protection against market volatility, right? However, it's essential to carefully review the policy terms, right? Indexing strategy, the caps, and the floor, as well as consulting with you know who, your favorite life, insurance agent, right? I and my team will be so pleased to sit with you on a free call. If you want something quick, we can sit with you on the first session, which is quick 30-minute session. Look through what your options are, look through what your situation is, and then we give you the best, advice based on what your situation is, right? Putting the right protection in your family and making sure to, that the index universal life insurance aligns with your specific financial goals and your risk tolerance, right? Thank you so much for watching our guide to the different types of life insurance. I hope you found this information valuable in understanding your options for financial protection. Remember to like, share, and subscribe for more insightful content. You can turn on the notification button so whenever I bring something like this very interesting to you, you're going to be the first to get the scoop. Now take the next step in securing your financial future, your family's financial future, your business financial future today with the right life insurance. Choose, to book a free discovery call with me and my team, anyone on my team. The link is in the bio or in the description. If you're still on Instagram, the link is in the bio. If you're watching me from YouTube, the link is in the description. If you're watching on a later date, stay tuned, link up with me. My social media handles are there, right? And until next time, take care and stay financially empowered. I remain your host. Have a blessed day, and God bless and keep you in Jesus' name.